Okay, hello everyone, and welcome to this second session. We're going to start now, and we've got for the next hour and a quarter, so we're really excited to be moderating this second session on how to measure impact. So my name is Matt Ripley, and I'm Head of Impact Services at a company called The Good Economy. We work with both commercial and development finance investors to help integrate impact considerations into investment and business decision-making processes. I've been supporting the EIB team on the EIB GDN deep dive program for a number of years now, so it's really great to see this event happening and be part of it. And more broadly, really, to see great attendance and this growing interest in the topic of impact measurement and management. Of course, hallmark and one of the defining features of impact investing is the commitment of investors to actually measure and report on the social and environmental performance of their underlying investments. And as we touched on a little bit in the first session, this rapid growth of the impact investing market in recent years has fueled these persistent questions about how impact should actually be measured and assessed. And within this, how is really actually a big bucket of questions, again, some of which we started to touch on in the first session. Who should be doing the measuring? Who should pay for it? What methods to use? And how perhaps do we need to trade off or right-size the rigor of some of the assessment and evaluation methods that have been prevalent in the public sector and development projects in terms of the cost, speed, and burden of measurement that may have different or a different perspective when you're working with the private sector. So we've got a great panel for you today. Everyone has their videos on now, which is great, so you can see them all. And they're all going to provide their perspectives on measurement across what we're calling the impact value chain. So kind of from investors' side who are deploying capital and have to be accountable for impact to their shareholders, through to the company perspective, and actually creating impact on the ground using the investment capital they're receiving, the researcher perspective, and actually working with a company to help them measure impact, as well as a broader view from across the market by a leading impact measurement practitioner. So I'll let each of them introduce themselves, but just very briefly to kind of go around the room, so to speak, on the panelists, we have Nina, Senior Economist at the EIB, Kadi, who's the founder and CEO of Nest, a company in Senegal that's offering high-quality maternal health services, and a company that's actually subject to one of the EIB GDN programs deep dives. We have Edgar, a lecturer in the business department at University College in Ghana, who led one of the deep dive studies. And we've got Karim, who's program director at the Oxford Impact Measurement Program at the Said Business School. So in terms of how this session will work, quite similar to all of you who are in the first session as well. I'm going to first ask each panelist to present or reflect for 5 minutes. And I'm going to keep you strict to 5 minutes, if that's okay, on your reflections on lessons learned, methods and challenges concerning impact measurement. During the presentations, please, all of you, feel free to write questions, comments, thoughts in the chat box on the right-hand side of your screen. If you want general questions, please ask to all of the panelists, but if you want a response from a specific panelist, then do mention that in your question. Once we've gone around all of the panelists for the initial kind of 5 minutes each, then I'll draw on some of your questions, mix them with some of my own, and we'll use that to kickstart the conversation. So without further ado, I think the order that I mentioned, all of your names there, is probably the order we'll go through for our initial reflections. So Nina, if okay, over to you.
Great, thank you, Matt. So Matt has raised like a bunch of really, really interesting questions. And as Matt says, I've worked for EIB for about 5 years now, and I've been really closely involved with the EIB GDN program. So I could probably go on all day, but I'm going to try and set a good example. And I hope Matt will interrupt me if I go over. So I was asked to draw out some of the emerging lessons on how to measure the impact of private sector investments. And I wanted to start with, a really optimistic thought, which is that we've really come a long way. Even in the 4 or 5 years that I've been with the EIB, I've seen a real kind of sea change. When I first started, I would talk to colleagues and to clients about measuring development impact. And, everyone was very polite, but I kind of felt there was a certain amount of eye rolling, like, oh God, we've got so much to do. And now you want us to measure our development impact. I mean, what is this? And I really don't see that anymore. And I think that's not just among the sort of public development institutions like the EIB, but also among, private sector investors, funds, and private sector companies. I don't know if that's because they kind of want to be woke, or because they're trying to get at our money, or because they think it makes commercial sense. I think probably it's a combination of the three. But, whatever the reason, it's great. It's making our life much easier because, we have to report on the development impact of all our investments. And, we see that data coming in from our investees much more easily. The conversation is much more cooperative and collaborative. So I think it's great. We've also come a long way thanks to organizations like the GIN, the IFIs and DFIs and MDBs coming together and things like the HIP. So we've come a long way in terms of getting harmonized systems, making life easier for everyone. So I think, we're on a good track in terms of doing the basics of, understanding for each investment, how many people are employed, how many customers do they have, those sort of direct results. The second thing I wanted to highlight is that I still see a lot of diversity when we're trying to go a bit deeper. So, with the EIB GDN program, we tried to get a bit deeper insights into questions like, who are the customers? Who are the people being employed by these firms that we're supporting? Are they young? Are they old? Are they rich? Are they poor? How are they benefiting? People are getting a loan from a microfinance. Is that really something that's changing their lives? Or is it just, helping them to tide over, to keep their kids in school? What exactly is happening on the ground? And there we see a lot of diversity. Some institutions are taking a really rigorous impact evaluation approach. We worked with researchers from developing countries. We had we've got Edgar here today, but we had a real interesting bunch of young and talented researchers who brought some great perspectives to the work. We also brought in some real academic heavyweights, the likes of François Bourguignon, Ariana Ligavini, to help us. And I think we've got a lot out of that. But of course, others are taking a different approach again. I think particularly about, the lean data approach of 60 decibels. But also a lot of other organizations out there offering different solutions, some of them quicker, than what we've been able to deliver. And I think for each one of those there are pros and cons. I guess where I think we're going is that we'll stop seeing these as approaches, but we'll see them as different pieces of a bigger toolkit. So we'll start to think more systematically, okay, what do we want to get out of our impact measurement, and what's the appropriate way to do that? I think we're not quite there yet. I see it as still the kind of industry, and EIB is still at a sort of stage of experimentation, which is very exciting, but we need to coalesce a little bit more. The final thing I wanted to highlight, I think, as sort of a challenge. In the last session, someone used the word bespoke. I think if you look at the EIB GDN studies, you'll see that we've got I think 10 published already, but they're all very different, right? Because we've looked at very different investments in different sectors with different objectives. So we've used different tools, we've used different approaches. How do we start to bring together the information we get out of all these to really learn something? And, I think events like this can help that. I think there are a lot of sort of aggregators out there. But again, the findings are coming in thick and fast, and that's something we as investors need to start thinking about. So I'll stop there and hand over to you.
Thank you very much, Nina. And it's really interesting to hear with your investor EIB hat on I think two key takeaways there. One, on this importance of measurement in the conversation. We could probably debate all day on the why of why actually that there is that growing emphasis on getting measurement right and doing it so it's value add for all actors in the kind of the impact investing ecosystem, so to speak. And I think the second one, which is really key as well, is how to get that more generalizable learning. Move beyond the kind of the slice of a particular investment in a company to what can we learn from that beyond the particular context and four walls of the company, which is a great segue to Caddy from the company perspective. Over to you. It'd be great to hear your initial reflections.
Thank you, Matt. I'm very glad to be to take part on this panel. As you said, so our company Nest provides quality maternal and child care in Senegal, and we're trying to make it accessible to low middle income populations, mostly who are uninsured populations, and also we provide education on reproductive health. What I'd like to start with is just to say, first of all, that in the healthcare industry, a little bit like education, it is very capital for a private company to have as part of its agenda an impact on the ecosystem. Because in our environments here, there are a lot of things that are not ready. We don't have enough skilled healthcare professionals. We don't have it. If I take about, in my business, we don't have a system for, to treat biomedical waste. And these initiatives, these solutions come from private companies like ours. And so if you want to do sustainable quality, it comes at a cost. And so you have to impact the entire ecosystem. And when we talk about impacting the ecosystem, then it becomes a challenge to measure that impact. Because you have to impact the ecosystem as a whole. And this is where it becomes a little bit tricky. Most of the times, so we've had different experience of impact measurements, mostly from investors. And as you said, we've been part of the deep dive study, and it was actually a great experience. But we've had other experiences also of impact measurements. One of the things is that most of the terms are very quantitative. And in healthcare, if you look at a technical aspects, especially in maternal and child care, where we try to measure maternal mortality or child mortality rate, we as an organization are not big enough to be able to impact those national rates. But we're doing a lot in terms of training of midwives. We're doing a lot in terms of educating the population, but we cannot measure it through, maternal mortality rates or child mortality rates because we don't have the, critical size. We also see that sometimes indicators come from, we are asked to measure indicators that make sense in Europe and a little bit less in Africa. Sometimes maybe it fits a narrative that are understandable to Europeans, but that are less relevant here in Africa. If I look at the number of employees or the salary, the average salary that we pay, sometimes I've seen indicators such as, okay, this company pays 50% more than the minimum salary in the country, except that the minimum salary of the country doesn't allow anybody to survive in livable conditions. And so we have to look at a little bit more the relevance of these indicators. And just as Nina said, actually ask beneficiaries what is important to them and how it changes their lives, basically. What I said also is that there is a lot of focus on quantitative data. I think there should be a little bit more on qualitative and just citing the actions that this company is doing to improve their ecosystem. And something that maybe we don't see enough is how our impact indicators weighing on the management performance evaluation. In terms of governance, we are still evaluated on financial performance and very little on impact, on the impact that we have. And if we want to be very consistent and on impact investment or impact, we have to look at how companies, the weight that companies give impact objectives, as compared to financial objectives, because all of this comes at a cost, as I said. I'm going to
Thank
stop
you,
there.
And that's fascinating, and I think really great to almost hear, if I can kind of paraphrase it in a way, saying, impact data is business data in a way, and in what you need to actually run a good enterprise, and sometimes what's coming down in terms of the data ask from an investor level might be quite quantitative, useful, but not everything that you need to understand and maximize your own impact, which may be then more qualitative or different methods, particularly looking around an ecosystem or a kind of a total impact perspective. So really, really useful. Thank you, Kelly. Which leads us to Edgar as our next panelist to talk about his perspective from actually having to do the really hard work of running one of these deep dives. Well, I have to say not on Nest, on another company in the portfolio. But Edgar, from your perspective, it'd be great to hear your initial thoughts and reflections.
Sorry. Thanks, Matt. And I would say thanks to EIB and GTN for organizing the fellowship program and putting this conference together. So hello, everyone. In terms of measuring the impact, it can be quite challenging because there are different realities on the ground, and these realities can sometimes affect the design of the program. Occasionally, in terms of methodology, you might choose something that's good, something that's scientific and would get you to get the true impact. But then on the ground, you meet challenges. And I think the key is how one adapts to these challenges, one gets around them. Because if we take the companies, for example, companies would always choose where they site to do their businesses. Companies would choose the products and the services they offer. So in terms of the scientific aspect of it, and in terms of says in the quantitative sense, in analyzing these impacts, we think about the fact that the intervention is random, that the people who receive the intervention are also random in a sense. But the key is that occasionally, in most cases, these are not really satisfied. So the rigor in terms of the measurement, as said earlier, varies a lot. And I put it down to data challenges as one of the issues. One thing that we found useful, Franklin and I, who worked on this project, is that companies that have a research department, it tends to be helpful, because then when you are meeting with members from the organization, you get someone who is actually versed in some of these issues, and it gets the conversation going. Trust is also important, gaining the trust of the company. That can be very useful in getting data from the company. Because at the end of the day, some of these interventions, there is highly sensitive data. Sometimes it's quite difficult getting this data to actually improve upon measuring the intervention. So if that trust and that bond is there, it can sometimes help in improving measurements in terms of the having the key factors you need in getting a good measure of the intervention. And it could also help in terms of uptake of the results from the research. Then you can have the research department being a partner in pushing the results that come up forward. So these are some of the realities. Also, sometimes since we are in the developing country context, it can be difficult to reach some of these populations. The populations also are quite heterogeneous, and so these are considerations in carrying out surveys in the field, which can potentially limit the effectiveness of the research or what we are measuring. More importantly, the defining a comparison group to the group that received the intervention. That is very key in actually getting a good result from the study. And the point of most of the tools out there to help us carry out these measurements. So whether we are thinking about the broader literature on measuring policy evaluations or impact evaluations, if we finding it difficult to actually define a good comparison group to the group that we are that received the intervention from the company, for example, whether it's a microfinance company and they are receiving loans. If we can't get a good comparison, then it becomes quite difficult to say whether the loans actually led to changes in the livelihoods of the recipients. So these are all things that kind of affects our measurements and things we need to think through very carefully in designing the methods we would use and the overall research design for measuring the impact. And I mean, we always have to be clear that most cases, if we are not doing a randomized intervention, then the challenges from working with non-randomized interventions would always come up. So I think I would stop here, and I have more to say, but would say that during the question and answer sessions. Yeah, thank you.
Thank you, Edgar. And I think it's a great summary of, I think, some of the practical, commercial, legal, logistical, as well as quite methodological challenges facing people actually doing the measurement in practice. And I think you've really, again, built on Kadir's point that some of the data, we talk about, it could be data that's used to segment, for businesses who help them segment their customer base, retain or boost employee morale and satisfaction, manage their risks. Some people may call it impact data, others may just call it data that you need to make good decisions. So often it's the same underlying data. It goes back to the point in session one that there's a lot of jargon to call the same thing different names, potentially in the world of impact. Before we go on to Karim, Ariana has joined us, and we can revert probably to our original running order. So Ariana, welcome to the panel. Ariana, in the kind of the impact value chain, kind of has the perspective of an organizational unit supporting impact evaluations. She leads the development impact evaluation group at the World Bank and was one of the 5 expert advisors for the EIB GDN deep dive program. But Ariana, we're just, I'm not quite sure exactly when you joined, but we're just going around the 5-minute kind of reflections of each of the panelists. So I might, if it's okay, slot you in just before Karim's perspective. So if you could kind of kick off with 5 minutes. And Nina, I don't know whether you heard her earlier raise a really interesting question around individual studies of studies of individual companies is great. How do we, add that up to more generalizable learning in a private sector context? Can we, should we? So already that organizational learning perspective has been brought in. Over to you, Ariana.
Thank you, Matt. I'd like to offer kind of a slightly different perspective on what is happening today. First of all, just from the corporate, international kind of private sector, the big firms in the corporate world are using impact evaluation methods, and specifically randomized control trial, not every once in a while, but kind of systematically, day by day, to optimize their product, optimize take-up, optimize profits. We are facing a revolution in the amount of data available, high-frequency transactional data in the private sector that can be used for analysis. And firms who have the skills within them to do this kind of work are doing this very, very systematically and are beating the competition in so doing. So the question is, how do we help the firms in developing countries catch up, or really just enable them to compete in this world that is moving very, very fast? And a lot of these firms also have high frequency data. I'm talking about, platforms, commercial platform to really address barriers to commercializations and who offer solutions to markets that were really limited in their access to, kind of linking producers to buyers and really making these markets work. But in developing countries, these firms not necessarily have the research capacity yet to really take advantage of the wealth of data that they sit on. And so I like to take a perspective of capabilities. Really focusing on building capacities in the private sector, in the local private sectors, to do what others are already doing, and support them by helping them use their data and extract information that is actionable. And so even before we start the discussion on whether we should randomize or experiment, just extracting the data and have a descriptive view of what that data says. What is the distribution of users on a platform? What is the distributions of producers? How long who joins these platforms? What are the characteristics of those firms? What are their constraints to really making it? Do they fall off very quickly, or do they survive on those platforms? Are they able to market their products, and so forth and so on? And so kind of building the capabilities of platform operators, for example, to start asking the right questions regarding their own platforms. Are my platforms working in the way they should? Capabilities to use their data to extract that information, to act on that information, to then provide perhaps a service to the users on their platform. Those services can be multiple, could be kind of support to the micro enterprises from a financial point of view, perhaps access to finance, access to training, etc. And so kind of using kind of the data and research skills in academia to support the private sector succeed, the local private sector. Now, in terms of experimentation, so that kind of descriptive analysis can already help researchers kind of buy their trust relationship with the private sector, kind of demonstrating how the usefulness of that data and how they can support that process of discovery that then helps firms, local firms, succeed. And then once that kind of relationship is established, then start kind of stimulating a process of asking questions that may be then amenable to randomizing different treatment within, say, the client-based or the supplier-based to understand certain issues. For example, providing access to finance to micro and small enterprises, and understanding whether that is in fact a constraint that allows those firms to survive and strive on these platforms. I really, back in the 90s, I remember meeting the head of experimental evaluation at Barclays Bank, who was traveling to South Africa to teach ABSA, a local bank, how to do this. This was the early days of experimentation in the banking sector, and they were already thinking on how to transfer skills to local banks. And I think the same 20 years later, we are still struggling to build the capacities to do so in other sectors. But this is something that for sure has a huge market. And then we need to invest the capabilities, kind of the academic capabilities, to take these activities forward. I'm going to pass it back to you.
Thank you very much. I think two really big takeaways from me there. One, often the conversation about measurement is how can you get the data? How can you do measurement as a one-off rather than how can you build capacities, ultimately in the companies where data is flowing up from, to kind of get that chain of impact data working well. I think the second one would be, and this is a question that's already coming through, I think, from the messages, is how do you right size those kind of, what the corporate world probably called A/B testing rather than RCTs, in the SMEs, the kind of the businesses that are receiving impact capital, rather than the kind of the bigger businesses that can have data, huge data capabilities. And I think one of the things from the EAB GDN program as well, where probably one of some of the most successful, as Edgar actually mentioned, studies were where the company already had a research lead or kind of strong capability to make use of the data, but also to articulate what data they need. Because it is about kind of the data capabilities embedded within a company. Super. Prim, sorry to push you very much to the last of the order here, but certainly not least. It'd be great to kind of hear your perspective as someone who hasn't been involved in the EIB GDN deep dives, kind of, but to take a step back and kind of think across the impact investing market. So please, over to you.
Great, thanks, Matt. And it's just great to hear the various perspectives, and there's a lot of richness, I think, to many of these that we can pick up on in the follow-up. Assume you can hear me all okay? Yeah. Great. So I'm going to draw on a few different perspectives. As Matt said, I lead an executive education program at the University of Oxford around impact measurement, as well as the University of Cape Town. I've been an advisor to impact investors, primarily in North America and Europe, but also have worked as a development evaluator with foundations and ventures. And so what I'm going to try and focus on is knit some of those perspectives together and highlight maybe some of the tensions and challenges we can pick up on in our follow-up. And I'm going to try and come back to this point that there are many possible uses and users for impact measurement. And I think we have to be very cognizant, and as Kadi and Nina, Edgar, and Ariane have all pointed out, that the perspective you bring on how you answer these questions that you pose around measurement really influences the choices around the tools and approaches and what is considered to be good enough, as well as the questions around who pays and who gets value. So I think from the teaching perspective, one of the frameworks we use is asking the right questions in the right order. We use this very simplified framework of starting with your why, moving to your what, and then to your how. The reality is that many investors like to jump straight to the how. They try and pick the right approach or tool or maybe even set of metrics. The reality is that often that's insufficient to address the full range of their needs. It might even be misguided if you pick the wrong approach. And as Patty said earlier, if your goals are, for example, more transformation around your ecosystem rather than just a transactional program or service delivery angle, you can very easily just measure the wrong things or measure things that are easiest to measure. And so I think one lesson is asking the right questions in the right order. As an advisor to impact investors, for a long time, impact investors were defined by their intention. Just having the intention to be an impact investor and have impact was probably sufficient to have that label. I think now we're much more serious around these measurement questions, primarily through framing of impact theses, whether it's a theory of change or something similar, and then integration, looking at processes through the full investment lifecycle around how to ask the right impact questions at each stage, not just necessarily at the end to find out what happened. And so I think we've come a long way around that. But there is a lesson here, I think, around getting clear around the investor's intended contribution. This term around contribution is used interchangeably sometimes with additionality. They're not the same thing, I think, in many places. And so one of the areas we'll probably have to elaborate on is how do investors think about their role? How do enterprises think about their role? And how do we think about proportionality and as it relates to the kinds of methods and choices along the way? And then just with my evaluator hat on, I would say that just two initial observations. The first is that the traditional program evaluation and impact evaluation languages have been adopted in many of these market contexts. They're not always easy to apply or retrofit or make the business case for. I think we can all acknowledge that, but they do have a lot of value. And so one of the questions is, how do you make those choices around rigor versus utility? And I think as several people have mentioned already, that being able to generate actionable insights, shorter feedback loops, those are really what we have to get better at. And it also goes a long way in answering the who pays question. We're getting better at, I think, understanding these dimensions of impact. You know, the impact management project, for example, at least for impact investors, has provided a lot more clarity around terms such as what are the effects, who are we talking about, and how much impact. There are other dimensions, such as the investor contribution and the risk of impact not occurring, that are becoming even more important. And I think we need to do a lot more work on those particular areas in order to make them useful. So I guess one of the areas I think we need to get better at is not necessarily around methods, it's about evaluative thinking. So asking the right questions in the right order, making sure those are asked consistently and coherently, and then bringing a bit more transparency to each stage of the investment lifecycle around how investors set expectations, how they think about integration, and then what performance might look like. And this is why I think both in the prior session as well as earlier today, you know, we've been talking about concepts such as impact measurement and management, monitoring and learning. And so there's, I think, a broader toolkit than sometimes evaluation and evaluators are given credit for. And so I guess I'll leave this comment on an optimistic note, and maybe in the go around, we'll get into some of the challenges that I've also raised.
Thanks very much, Karim. I think that's it's a great kind of summary of almost this conversational shift that's happened in recent years to remove or complement the term impact measurement with the term impact management. And for those of you who know Rockefeller Philanthropy Advisors, who actually think first coined the term impact investing a decade or so ago, and their recent handbook on impact measurement, it's actually kind of saying, you know, good measurement should help organizations manage forwards. You know, the idea is to kind of not just look back at what impacts has occurred, but use it as a framework for kind of embedding that more evaluative thinking, you know, into everyday organizational processes, not just in the rearview mirror. There are a host of questions coming in, which is great. I am going to, some of them are directed to you as individual panelists. I'm going to go around the room again, so to speak, and fire them back at you. There's a lot, and I think Nina will, if we can pick on you first again, if that's okay. There's a lot of questions coming in, particularly around kind of, you know, methods, and I think RCTs have been mentioned a lot, you know, the wisdom and value and practicality of having control groups. You know, is it ever going to be possible to come up with methods or produce a kind of way of measuring that's going to be useful and interesting for all these different stakeholders in the impact chain, given the different interests and perspectives?
Okay, so Matt, this is a big question, but So I think one of the comments, actually, one of the questions has sort of said, well, the methods, I don't want to start from methods, right? And I think Kareem also said that we shouldn't start from the how, right? I think, we're never going to have a successful impact study if we go in saying, right, I want an impact study using an RCT, or I want an impact study using a difference in difference. I think we're going to have a successful kind of study where we can really contribute in something, where we go in and we listen to the concerns of our stakeholders, we listen to the company, what's interesting for them, and we think about really what are our objectives in this investment, and we really think about what are the kind of methods that we can use to get at that question. What are the data that are there? I think Ariana was really highlighting that some of these companies really do have a lot of data, and it's really about helping them to make use of that. And I think, that's something we tried to do with the EIB GDN program, but we certainly and didn't get far enough with that. And I think in future, there are a lot of new opportunities coming up with big data, machine learning, that I think we should be exploiting more. But it's really looking, what are those opportunities, but, remaining anchored in the questions of interests. I guess, my reflection, I often hear this idea that there's like different stakeholders and they have these kind of competing objectives. And I really don't buy that. On the whole, under the EIB GDN program, I didn't see that, the companies want one thing and EIB wants another. Of course, there are different priorities. But generally, what EIB means when we talk about development impact, we want to know what's happening to the customers, to the workers of these companies. And, for private sector companies, whether or not they have an impact objective, they want to know more about their customers. They want to know what they're experiencing, what they can, offer to bring them in. So I think there's a lot of overlap of interests. Where I see, potentially, I wouldn't call it conflict, but, a difficulty of aligning is partly communication. So sometimes we're just talking different languages. We as an investor, we're talking about development impact, whereas, the firms are talking about what's going on with our customers. And also, as Ariana was saying, private sector companies use RCTs all the time. They call it something different. It's the job of us as investors and of the researchers to explain why the techniques they're proposing are actually going to give the company something that's a useful base for commercial decision making, why this kind of rigor is actually really an important thing for them, that they're making reliable decisions. And I guess, sometimes we have very practical sort of conflicts of interest in terms of things like timing. So, sometimes as an investor, you have a longer time horizon. You can wait a year, 2 years for results of a study, whereas that's not going to be so useful for, a young enterprise. So I think we need to think carefully about how to hit a sweet spot that's something interesting for an investor, but also something that can really be applied by some of these companies before they, go ahead and completely change their business model, right? So it's something that's really influencing what they're doing. But I think there are a lot of opportunities there. We just have to think smart.
Thanks, Nia. And I think that's, some distinction I've always made is between, I think really important, first of all, it's kind of like the why before the how. And kind of, as Karim said, to kind of ask the right questions in the right order. I've always thought that broadly, when you're thinking at company level or investee level needs of data, you can kind of think that you can split it into two camps. Some may actually want and kind of more of academic approaches to measurement because they actually want to use the data for marketing, for fundraising, for proof of concept of their business model, for use with regulators. Something that actually would place a high degree on the kind of the highest levels of rigor versus speed. The other side of the equation, as you mentioned, is the more venture capital space companies that have probably by the time you started your study have changed their business model. By the time you finished it, they move so fast that they want speed, they want rapid insights, and they really don't care about rigor to a certain extent, or at least on the vocabulary, it's speed, right? So yeah, that kind of distinction about uses and is absolutely key. Kelly, we have a number of questions coming in that I'd like to kind of bundle together and direct to you, but generally all around the topic of, how can impact data meet your needs as a company better. I think the two specifically were, how do you balance the focus on ecosystem impacts, kind of non-financial metrics with enterprise profit, so financial metrics, and on the other side, the kind of actual kind of indicators that you track. A very practical question on what metrics do you track? I think you've touched on that already a little bit in terms of qualitative and quantitative. So it'd be great to hear your perspective on those two questions.
Thank you. This is a question that I often have, is how do we balance impact and financial results? And for me, what is really important is that those two concepts should not be concepts. It's very important that they feed each other, basically. And for it to happen, what I believe is that we have to think long term. We can, I mean, it's very difficult to think about impact and financial performance if you are in a very short term horizon. And so this is a balance that you have to do on a long term perspective. For instance, for us, a framework that worked very well was implementing a quality management system, where you have to assess your, you have to meet expectations from different parties, relevant parties that influence your company, from your employees, your customers, your investors. And so this framework of a quality management system really helped us balance, between the impact that we have on the ecosystem, which impacts directly the quality of service that we provide, and also the interests of certain stakeholders, relevant stakeholders such as investors. So we use that framework to actually balance those two aspects. But ultimately, as I said, if you want to do sustainable quality in healthcare and in various sectors, you have to think a little bit long term, and you have to balance those two accordingly. And also a question about the indicators that we use that are more adapted to the local context. We are still thinking about those type of indicators, but I'm just going to share with you the state of my reflection. When I think about employees, for instance, very often my experience is that in Senegal, the psychology of people is to be a little bit more free, to have more revenues, and so many people feel like a formal contract is actually impeding this aspiration. And very often we used to say, okay, we have this many formal employees, where in fact for them it's an 8-hour-a-day job that prevents them from having another activity where they could add more revenues. And for me, if you really want to look at the impact that we have on employees, maybe you should ask them, how do their jobs help improve their lives? What do they value in their lives? Most of the time, it will be education of their children, investment in a new home, or things like that. So if you ask them, okay, have you been able to send your child to a better school because you had this job, or have you been able to have a loan to build your house, things like that, things that are important to them, then maybe we'll have a better understanding of the real impact that we're having on people.
Thank you, Kelly. No, that's fascinating. I think it's I can't remember who said it once, but it kind of really highlights there the risk of kind of the tyranny of metrics. I think someone said, if you end up pushing down a lot of metrics and things, and superimposing what we think is positive impact all the way down to the levels of, the people on planet you're actually impacting, you may end up precisely measuring the wrong thing. which is what nobody really wants to do, but often the system generates that kind of that bad data. Edgar, a couple of questions came in on the chat that I'd like to direct to you. One particularly from Vincenzo, I think, on kind of solutions to find really that balance between things like cost effectiveness and a reliable control group to actually measure impact. It'd be great to hear your reflections on that question within the wider theme of, how do you actually, as a researcher going to work with a company to support them in doing impact measurement, kind of build that shared understanding between the company perspective, the researcher perspective on both why and how to measure impact.
Okay, thank you very much. Well, in terms of the control group, there are a variety of ways one could think about this issue. The impact studies have sometimes resorted to instrumental variables to try to achieve, to try to reduce the spillover effects of the intervention on other parties to the intervention. Another way one could think about it is in terms of the company's clients. One could compare more recent clients to older clients. So, for example, if we are looking at a microfinance company, if it's going to be difficult finding a control group or in actually going after them, it's going to be expensive. One could think about clients that just receive the loan versus clients that do not receive. Clients that receive the loan, let's say a first loan, versus clients that have had multiple loans. A much better approach would have been but often banks do not collect this data. A better approach would have been to look at clients that apply for the loan, and then if there is a rule on giving the loan, one could compare those that are just those whose loan applications are just rejected versus those that are just accepted. So those who score according to the rule close to the threshold. So it's more likely that the groups around the thresholds of just being rejected and just being accepted are more likely to be comparable. So there are quite a number of other ways of thinking through this issue. But the challenge is always whether that data is available. So that's where the simplest case is normally either comparing in terms of the years the clients have been with the company, or going over to collect the data. In terms of the different perspectives, well, at the end of the day, as a researcher going in to assist the company, the company's perspective has to be taken into consideration. And at the end of the day, for the company, it's always the bottom line and the profits. Getting companies involved is thinking through in terms of what one is studying. So sometimes as researchers, we may go overboard by thinking more in terms of grandiose schemes that may not be kind of what the company wants. Sometimes the company just is looking for something simple that would improve its operations or profitability. So it's about merging these perspectives and leaving behind the ivory tower style of thinking through the issues. In terms of the funders also, occasionally the realities differ from the messages that are out there. So it's again balancing these perspectives and getting these perspectives across to the funders. I mean, some funders are quite who have had much experience in some of these contexts, do understand the challenges, and so are a bit flexible in terms of being able for all three parties to get a common ground. But again, because some funders' funding cycle, I mean, everything is time bound and all that. Sometimes these are what creates some of the challenges also. But I guess these are things that if parties sit down and parties have a frank conversation, it's quite easy to solve or come to some form of consensus or agreement. I think there was a question on the role of having an independent player, and I mean, I think we are all playing a part, whether it's the universities, whether it's the think tanks, whether it's the funding agencies. There is some collaborative effort at ensuring that the impact measurement is being done appropriately and being done well. But I guess it's just sometimes the realities on the ground that sometimes brings up some of the problems we see. I'll stop there.
Thanks, okay.
Thank you.
No, and I think a really important point as well, and a very practical point, and it's always just kind of working with the data that the company has and kind of using that in smart ways, rather than coming up with, you know, a predefined idea of what a comparison might be. And actually, that question you touched on earlier, I'd like to pose to Karim as well on the verification question that came up. I think there's a bit of a split, if we kind of take a step back in the impact investing market, between, I guess, the convergence of activity around kind of process standards and saying, well, look, everyone measure what they want, or it's self-reported, you know, but what's important is to quality assure and get some independent view on the process of how that data is generated. And on the other side, a lot of what we've been talking about in the first couple of sessions today, which is around kind of how do you get more kind of rigorous data on individual investments, or actually collect, you know, primary data potentially on the impact of investment. Where do you see as the kind of the future of that going, and particularly how these more kind of rigorous impact studies can fit into the wider scope of impact measurement and management and the way the market's moving?
Yeah, thanks, Matt. And I'll try and take a stab at some of those questions. And I think there's been some really good comments so far in the chat too. So I recognize we also have a mix in our audience of investors, evaluators, program delivery people. So I'm going to try and maybe clarify where I think there's sometimes a bit of a tension between these competing ways of looking at the world in terms of what is good enough, who is responsible and accountable, and then who's paying. Because these are really some of the bigger questions which force, I guess, a set of choices. Certainly in impact investing, if I can drill down in that specific area, we've seen the field evolve over the last 10 to 15 years of moving from this focus of intention to integrations that I've talked about. And arguably this next frontier is around thinking about impact integrity. You know, the IFC principles for operating principles for impact management, that was one of the impetus or reasons for that. In some ways, you can almost think that this is a natural evolution of more sophisticated practice. I would say that, you know, we've talked a little bit about why we might need more dynamic versions of measurement that allow both ventures as well as investors to make decisions in ways that perhaps traditional approaches to evaluation that we have used in development don't necessarily allow us to do. And so I think there's a lot of power in bringing both of those worldviews together to say, how do you understand what is happening in a more shorter term perspective and the management implications of that to help groups like, Kadi, you mentioned this in terms of what is useful for how you grow your business. But then also, if we think about the different types of investors, some of them are private capital, others have public capital. And so the accountability dimensions for an EIB versus a private equity fund that has not gotten any public funding are quite different. And that obviously influences the nature of the designs, the nature of the scope of the work, and then how far you can go, recognizing that often we have this mismatch between the financial holding period and the time period around which truly impact capital I, is delivered. And so I think, just to answer your specific point, in that there's a lot of activity around impact evaluation, and I think impact evaluation in its broadest sense, and I think about this really as the full toolkit of evidence gap maps, systemic reviews. I think those have really important roles to play, because if we acknowledge that private capital and private investors are not going to spend the time and the money to track all the way to capital I impact, they will have to rely, I think, on proxy measures that are informed by really good evidence that is valid. But also, I think that we have to be open to different worldviews around what that evidence is saying. So, we've got standardized ways of looking at evidence that talk about validity and rigor, but we haven't done as good a job of that interpretation layer of saying, well, if we have output or outcome data of certain kinds, how could different stakeholders interpret that? And I think it's partly to, maybe kind of you made the point earlier around localization or context specificity. And so I think that's where we have a lot more work to do, in that there's no shortage of frameworks and tools to organize evidence to be more rigorous. But I think where we have to do a lot more is to say, how do we think about the interpretation when we use the language of positive impacts or negative impacts, direct or indirect? And this is where, if we come back to impact verification, right now a lot of what is being talked about is process verification, not necessarily outcome or impact verification. And so when we try and understand how we might do outcome and impact verification well, who is doing that is really going to matter. And so we've already begun to see, for example, traditional accounting firms or evaluation firms say that they do some of this. Are the stakeholders that are most affected by these kinds of investments part of that? Not usually. We are seeing some groups like the UNDP SDG Impact, Social Value International, Accountability Council, think about different ways of engaging stakeholders at each stage of the process. And then to pick up on one of the questions in the chat from Julie, yes, I do think an independent broker and think tank would be very helpful in unpacking and distinguishing some of these perspectives in ways that I think doesn't have the kind of institutional baggage that many other groups have. So just that, to reiterate this final point, that when we talk about private capital versus capital that has a public good component or public orientation, we have to look behind the kind of notion of the uses and users, where accountability lies. This all has a kind of connection to incentives, but it also relates to who does the verification and who is the intended user and use. Because if we miss that, we'll have these really robust looking verification reports, but won't necessarily help us in the longer term goals of empowering stakeholders and ensuring better degrees of accountability and performance than I think we have today. I tried to answer those questions, Matt. Let's maybe we can pick up some of those in the follow-up, and I'd love to hear from everybody else whether they agree or disagree with some of these things.
Thanks, Kim. A very rich set of thought points there to build on. Ariana, I'd like to ask a question that was directed to you by Pierre, particularly on, I think it was quite a high level question. So do we have good stories to document the impact of impact measurement? Really great to hear your perspective on that. For a variety of reasons that would be important. I was mentioning, see, from kind of sustaining the current movement of kind of more interest in impact, to actually document ways of using impact measurement to kind of manage forwards, as I was mentioning earlier. So it'd be great to hear your perspective on that, Ariana.
Yeah, thank you, Matt. So at DIME, we systematically measure the impact of impact evaluation. We kind of conduct very systematically and across the whole cycle of a collaboration with our clients to understand at what stages and with what inputs they take decisions that then changes the path of their, in our case, programs, meaning we mostly work with government agencies and we track their decision-making based on the data and evidence that we generate with them and understand how that changes the path of their programs. Edgar, maybe you want to silent your mic. So I'm going to give you just very few examples. One example comes from an agricultural project in Bangladesh. Most agricultural projects use demonstration plots to convince farmers to adopt new technologies. That the effectiveness of demonstration plot was measured, very with a randomized control trial relative to no demonstration plot. But then we kind of pushed for innovating in technology adoption and tested self-demonstration. Self-demonstration, which is basically dividing up the new technologies among many farmers, allowed us to secure 2 to 3 times the level of adoption, 2 to 3 times the level of adoption than the traditional model of technology adoption. This was 2 to 3 years after the implementation of the program. Increasing your impact by 2 to 3 times is obviously a very large number. Another example comes from tree planting in Ghana, where we tested, in addition to providing seedlings of small trees, in addition to that, we tested financial incentives. And that was, we were able to increase the willingness of farmers to participate by a factor of 3, from 28% to more than 90% of farmers. Now, these are type of numbers that we track, and so the issue here is, can we test very rigorously different modalities of implementation of anything, whether it's private sector or not, and then identify the modality that works better, and can we ensure that that modality is then adopted and scaled up? Once that modality is scaled up, we can actually compute with precision the effectiveness of the RCT on the effectiveness of a program or a scale up of a program. Now, what's very interesting and not necessarily predictable is that the approach, kind of a very adaptive and iterative approach to research, working with a client with intensive use of data and research, can actually generate increases in the margin, in the profit margin, in the return margin, not by 10, 15%, but we're talking about doubling, tripling results. And therefore, the cost of this type of involvement from the research side is repaid multiple times. And so this is just one example, kind of the adoption of the RCT proper, but we actually follow results all along the chains. For example, how many decisions are taken on the basis of the analysis of the initial data. Somebody like the head of the civil service of Ghana, once we provided a descriptive analysis of his civil service data, he said, oh, I took hundreds of decisions. I had never seen an analysis on my own data. And this is, this story repeats itself everywhere we go, because most, whether it's private sector or public sector, most people, most agencies sit on a lot of data that they have never analyzed. And that richness of the analysis, even a very simple analysis, can provide a huge amount of information that is actionable. And then once, the interaction between the researchers and the client continue over time, the opportunities are magnified. And that kind of, we should never look at this as a one-shot opportunity. We should really look at it as a relationship that expands in time and creates new and new opportunities for better and better questions and potentially more impactful questions, where the answers will really contribute to either creating profit or creating social value. And if I may say one more thing about this, there is a little bit of tension here in this discussion between the social impact and the impact on the firm that and the social enterprise that is participating in the study. I actually think these two things can be quite well aligned. That when we look at a social enterprise that is trying to address a constraint, whether that's provision of high quality health services, or whether that's kind of disrupting, the agricultural markets by providing, Uberizing the marketing of agricultural products to the urban areas. The fact that we can help that firm figure out its own workings and its ability to grow and be more efficient kind of goes hand in hand with the idea of then generating social value. And that if that's not aligned, then actually we're working with the wrong social enterprise, so to speak, right? But the fact that we help kind of the workings of something is a necessary condition to ensuring that social value. My last point is that there is data in those firms, yes, but there is also data in other firms. And so we are using more and more data that is publicly available, but is produced by private firms. For example, Facebook and Twitter and weather and maps and Uber and Waze. We are using data with sometimes with agreements and sometimes just web scraping the data from the web to extract information about the workings of a whole city, of a whole country, and combining and integrating data that is publicly available but privately produced with other sources of data that then create much more layered vectors of outcomes that we can look at in each setting. So kind of moving from the A/B testing at the firm level into kind of looking at the workings of a market, we may need to use and be much more resourceful on the latter. It's actually much harder work to understand the economic impact of any interventions that we may be interested in tracking. But we also can kind of leverage a much larger amount of kind of data resources, and we can be quite creative about the development of data sets and data systems that can answer many important questions in development and social impact.
Thanks, Harana. Thanks very much indeed. And I know we're already kind of 1 minute past the close time. If I can monopolize everyone for a few minutes more, just so we can have one round of hearing from all of the panelists, and then Ramona will take over again and let you know about the close and tomorrow. But I think, Ariana, the point there, and it relates to I think what Karimi pasted into the chat window as well. I think there is this. We need to be aware of this kind of broad range of approaches, particularly ones that as well can, elevate stakeholder perspectives. And this is almost this laser sharp focus on, Ariana, as you mentioned, what decisions can I make with this data, being the planning point, the jumping off point to do impact measurement, because then analysis becomes easier. It's not about collecting a bunch of data and figuring out what to do with it, but working backwards from how you're going to use it, how you're going to analyze it, to what you're going to collect. So kind of that challenge that we've all been talking about, moving from lots of data to how to analyze and make use of that data, is the core one. I would love just to hear, I know we haven't had a chance to, it was probably could talk about this for, again, another couple of hours at least, but just to kind of go around the panelists, any closing thoughts, a minute or so each, and yeah, kicking off with you, Nina.
Okay, thanks, Matt. So, from my investor hat, I guess what I'm going to take away to put on my sort of to think about list is, firstly, I think the point raised by Kadi, we really have to listen. This is all about listening to our clients, to other stakeholders. what do they need? What do they want? What do they have already? And I think under the EIB GDN program, that was something we had to take really seriously. The researchers, I think, spent a lot more time talking to the investee companies than they'd been expecting. But I think that was a really valuable part of the cooperation. I think that's what makes it work. The second thing is, the tools are there. There are a lot of different approaches we can use to take seriously, what we hear from the clients. But I think we need to get more flexible. So we need to, adapt the way that we work on these kind of studies, the way that we measure impact, our systems and processes, to allow the flexibility to listen. That's a process for us, and it's something that we're going to be thinking seriously about as we try to sort of build on what's worked under the EIB GDN program, and what we take forwards.
Thanks.
Yes, so just to confirm what Nina just said, we were part of the deep dive study, and this impact measurement had a great impact for us because of the approach. It really helped us understand our customers, their psychology, the impact that we had on them, because we tend to minimize that impact, and also even how they perceived our service, depending on how our practitioners were presenting themselves to them. And so we did make a lot of changes after that. And this is also because we spent a lot of time with the researchers, telling them what was important to us and what we would like to also, what perspective we would like to have after this impact measurement. And as a last statement, I would say that one of the things that maybe stakeholders should look a little bit more, especially in Africa, is how private sector companies are engaging with the public sector. Moving forward in certain sectors, especially in healthcare and education, this is going to be very important if you want to have an impact. Most of the time we've been operating in silos, private sector in one part, public sector on another part. And if you want to have an impact, we have to engage with the public sector. So this is something that needs to be looked into in the future.
Thanks so much, Kelly. Edgar.
Matt. I would say, like was mentioned earlier, communication. So from the researcher side, we should do better with our communication. We should listen more and be adaptive to changing circumstances, and a bit more rigorous in applying our measurement techniques. Thank you.
Thanks so much, Edgar. Ariana, any closing thoughts from your side before we turn to Karim last?
I guess my only closing thought is that these approaches actually require a change in culture, a change in the way we think about the way we operate, from a deterministic view of the world to a learn as you go view of the world, and kind of building the capabilities that allow us to learn a lot from everything that we do, and kind of update and shift our way of operating over time. That's really the main lesson here. And because those capabilities are quite high level, the data and research capabilities that are required are quite significant. There is a need to really support that process kind of centrally and kind of, from the academic side, and support the process of building those capacities in the private sector. I think that has quite high returns.
Thanks, Ariana.
I have to log off.
Thanks so much. Karim, do you want to last word to you?
Yeah, thanks, Matt. And I think just to build on what Ariana has just said, the challenges are not technical, in my opinion. I think, as Ariana mentioned, it's about organizational change, incentives, transparency. There's lots of methods and tools we can design them to be right-sized or fit for purpose. So it's going to involve a lot of experimentation and learning. And so I just reiterate that the why questions are really the most important. What are the uses? Who are the users? To what end? Our goal is to have more impact, not just to measure and figure out what impact we did have. And I think that does require a very different set of thinking and ways of interacting. And we also should acknowledge how our probably current or past thinking and frameworks might limit that. So I'm quite excited and optimistic about this new phase of innovation, experimentation we seem to all find ourselves in. And I think it's important for researchers, evaluators, strategists, investors, ventures to all work together to figure out who's asking what kinds of questions and where there's the right degree of synergy, recognizing that we all have different needs and goals, but I don't think that they're mutually exclusive. And I think that that's quite exciting, even if we look at this panel, that can work in practice increasingly.
Thank you so much. And thank you to all of you as panelists, and thank you to all of you participating in the chat. The word of the day, I think, is listening. Ironically, unfortunately, Ramona couldn't get back in, so you can't listen to her wrap up, but she's asked me to remind everybody that we start from the same time tomorrow, 2:30 p.m. Central European time. And if you'd like to continue sharing reports or useful links in the event chat in the meantime, please do. But once again, thank you so much to all the panelists. Thank you so much to all of you for participating today.
Matt, bye.